let's bring on board Neeraj Deewan to understand the outlook for the market going ahead. Which are the sectors that one should watch out for currently, given the fact that there is some sort of a recovery that is creeping into the markets? A very good morning to you, Neeraj. Thank you so much for joining us on ET Now. And what's your take coming in on the markets? A steady recovery that's at play, but which are the sectors one should watch out for, given the fact that if you have to go by this sort of a recovery?
Yeah, good morning. Yeah, definitely we've seen a good recovery in the last 3-4 trading sessions. I think after the low it made on Thursday, the market has done quite well. And I think that though initially the large cap stocks in the 2 days of rally we saw on Friday and Monday, large cap stock did quite well. But yesterday we saw the breadth improving. Though market didn't do that well on index front, but I think there was some movement in selective stock, mid caps, small caps. So definitely the breadth will improve. So I think the sectors which one should look at is infrastructure, real estate, banking. Then there's defense, there's railway stocks, then there's EMS stocks. These are sectors, especially why I mentioned infrastructure was because in the first half didn't see too much of the government spending coming in. I think a lot of that can get bunched into in the second half. So I think that sector can be one sector which can outperform in the second half of the year. So I think one should be very stock specific, but I think if you look at the sectors which are dependent mostly on domestic economy, domestic growth, they should do well in the second half.
Would you want to name some of the stocks, as far as this infrastructure sector is concerned? Are you looking at L&T? Are you looking at some of the road companies, the likes of Ashoka Buildcon, etc.?
I think it's road companies and even L&Ts, pure infrastructure companies, even the smaller ones, the ones which are into EPC business. L&T definitely is the top in the list, the large cap, and valuation wise, it is also not that expensive. So even L&T, is a good stock to enter at these levels. Plus, all the infrastructure companies into roads, I think they're also, and company into, supplying for road, material supplying for roads, and all those companies should do well.
All right, so that's the take coming in on the picks when you talk about the infra space. Kunal, let's talk about what exactly is happening when you talk about the auto pack. How is the outlook looking for that particular segment? I know you will have absolutely no chart history to talk about the recovery that we've seen in Ola Electric, but otherwise, what's your view coming in on the auto space?
So they've fallen, very sharply in the last 2 months. I think as an index, it's fallen from 27,500 to almost 23,000 levels, which is a sharp correction by a huge, margin for an index which is formidable because you have so many stocks from the auto pack which are part of the Nifty 50 basket. Now, in the last leg of this 1,000-point recovery for the index, you've not seen any major recovery coming back into the auto pack. I think we've just seen largely like a 700-point rally for the auto index and maybe fewer percentage points for the likes of Bajaj Auto, Hero MotoCorp, etc., which these stocks have after almost like a 20% plus correction for these names. So which means that on the way down, these stocks were extremely weak, they were underperforming, and even on the way up, when the markets are going through a process of a bounce or a rally, these stocks are underperforming. My sense is that this phenomena is more related towards the expiry, because that's generally a phenomena which happens when a sector in a set of stocks, they underperform. The underperformance remains for at least 2 or 3 expiries, but post the end of a third expiry or a start of a fresh expiry, that's where we start to see a fresh trends emerging for many of these names. So my sense is that if the market keeps on getting stronger, the supports for the indices keep on moving up higher, then I believe eventually these auto stocks and betting on the auto stocks could actually be a very good risk reward trade, and especially the likes of Hero MotoCorp, Eicher Motors, Bajaj Auto, as well as even Tata Motors.
Okay, good risk reward as far as some of these two-wheeler stocks are concerned, definitely on the cards. But Neeraj, what's the view on Vedanta and Godrej Properties? Both will be in focus today. Vedanta, of course, got that upgrade from Moody's as far as the parent company is concerned, and the Saudi Arabia project being announced. And on the other hand, you have Godrej Properties, large QIP happening, almost 5.5% of equity, and it's coming in at a slight bit of discount, of course. What's the take on the charts of these two?
So first, looking at Vedanta, the stock has been sideways for the last few months after that huge rally from 280 levels all the way to 500. And for now, it looks like a pause in the making, so no real trend out here. Godrej Properties, a pretty similar chart for the sideways move for the last 6 months. And post a QIP, we could expect some bit of more consolidation. It's just that the band has now shifted multiple resistances around 3100, 3200. So would expect a range of 2600 to 3200 for the near term for the next many weeks. So no trade out here as well.
Neeraj, HDFC Bank at an all-time high. You know, some of the ring of that. HDFC Bank at an all-time high, nobody is talking about it.
Yeah, good morning. Yeah, actually, the kind of return it is given, though it may be at all-time high, the kind of return it is given has been quite what market is given. So even if you entered into 1600 levels also, it's taken so much time to give this kind of return. But though I think now, because the last few days, when even the markets were correcting, HDFC Bank did show good strength. So maybe it's ready for another up move from these levels. I think if it gives another up move from these levels of 10-15%, then I think you will get a lot of people talking about it again. So, but I think if one is holding HDFC Bank, I think it's been an underperformer, but I think this is not the time to really give it away and sell it at these levels and forget about it. I think one should hold on HDFC because it's a very strong franchisee. It's gone through a period of consolidation. The balance sheets have become after the merger has become stronger, and now it should be a steady growth from these levels.
Neeraj, what's the take on staples in FMCG? Because that entire consumption slowdown that we saw at the start of the festive season and Q2 earnings, and now Colgate talking about while the fact premiumization might continue, there is that moderation of margins is what they're expecting. What's your take on FMCG consumption, especially at the mass end of things?
Yeah, I think the last quarter you didn't see good results from the likes of Hindustan Lever and some of the FMCG companies. I think the stocks also corrected a lot. So I think one should be selective in this. I think, but if stocks like Britannia, Hindustan Lever, I think these stocks cannot be ignored. The kind of brand that they have and the reach that they have, and you get some leeway from the inflation front. I think these stocks should start doing better again. The volume growth will also improve. So I think one should be looking at selectively some of these names.
Neeraj, your rating on Adani group of stocks. Which one would you buy? Which one would you avoid completely?
Actually, at these levels, I'm not really a buyer. Though actually, I was never, I didn't really recommended too many of Adani stocks. But Adani Ports is one stock which is there in some of my clients' portfolios, which I had recommended at lower levels. So Adani Ports, I had recommended them to hold on to even after the bad news came. Though they've recovered from those levels, but still I had told them to hold on to Adani Ports. So this is the only stock which is there in some of the clients' portfolios, which I'm recommending to hold on to.
CLSA has outperformed rating on Bharti. I wonder where is Vodafone? And Kunal, that dinky bounce what we saw on I think Tuesday and Monday, Tuesday, there was a dinky bounce in Vodafone, right?
Yeah. So from 6.6, it's come to 8+.
Percentage is great, but in terms of rupee, it's like a dinky bounce.
Yeah. So, statistically, the stock was at a 50% divergence from its 200 DMA. So I think 13.5 approximately was the 200 DMA. The stock was almost at 6.6. Now, natural course of a stock is to try and cover up this divergence, because, such kind of steep divergences generally don't last for long. So, there's bound to be a point when the stock gets into a short covering rally or a very fierce kind of a rally on a short-term basis. But those are just rallies for these stocks. They hardly convert themselves into a trend unless there is a significant bout of news flow, complete change in terms of the data points for the stock price. So I think one has to just take it in a very similar kind of a manner. This is a process of a rally, maybe a mean reversion. The stock can come back towards 8.89 odd rupees, but I think that's the best which I can expect for the stock within the near term.
That's a new term, right? Dinky bounce. I've not heard that. I've heard dead cat bounce. I don't know what dinky bounce is.
There are a lot of millennial terms which I'm also learning.
Yeah, the Gen Z words now. Not even millennial. It's like even.
It came from dinky cars, small.
Oh, so okay, small bounces of sorts, sharp, sudden bounces.
You call them dinky cars? So the small cars which I've got a lot of kids in my house, so they play the dinky cars. You know dinky cars, right? Not heard of them?
I didn't hear about them. I know Hot Wheels. That's the latest I know, which was there at my time.
Hot Wheel is a brand. Hot Wheel is a
so
brand, but
exactly,
dinky cars
those
are the
type
ones
of
just small gadis, chota gadi.
We'll take that off air and discuss it further. But let's talk about the bada garis. And Neeraj, what's the take on auto sector right now? Because Kunal was talking about how two-wheelers are poised at a great risk-reward kind of inflection point. What's the verdict as far as four-wheelers is concerned?
I think in the four-wheeler segment also, you've seen Mahindra has been doing so well. So again, close to the 50-week high, not very far from there. And the kind of launches that are scheduled in the EV SUVs also, they've come out with very good launches. The record has been really very good for them. So even Maruti at these levels, I think it saw a correction at these levels. Even Maruti, I think they can make a comeback. I feel that this quarter, again, so many marriages happening. And so I think there's a lot of sales will depend on the marriage season also. I think they should make a comeback this quarter. So I would be a buyer in these four-wheeler stocks like Maruti and M&M on some correction from these levels.
Mahindra and Mahindra is actually at 3,000. Not bad, not bad. I mean, the EV launches yesterday, I mean, I'm yet to get any single sell note on Mahindra and Mahindra actually in a while. And we were just putting some numbers yesterday, and Mahindra, Neeraj, you always think it's a car company. We always think it is only autos. First we thought it's tractors, then we thought it is SUVs. But bhai ruk jao. Automobile is not even 50% of the total business. Services now account for more than 50% of the total business for Mahindra and Mahindra, which nobody talks about it. And that's my limited point, that unlike Tata Motors, which is only auto, and Maruti, which is only auto, with Mahindra and Mahindra, including me, I always think it is only autos. It's a holding company for Mahindra Group, and services account for more than 50% of the total business. And the growth gems they're sitting on, Sustain, one of the most fantastic companies in terms of solar, and solar being the buzzword, I'm sure it's a matter of, it's a matter of maybe quarters, or certainly less than 2-3 years, they will take it public, because it's got big reach and big size. So there is an embedded value in Mahindra and Mahindra, and yet it is commanding a PE multiple, which is much lower than what some of the peers actually are commanding for companies of that, pedigree. Neeraj, isn't that the biggest irony for the stock, that it is a holding company which has a large interest in auto? We value it as an auto company and nothing else. Neeraj?
Yeah, definitely that adds value to the stock. So that's why this been a portfolio stocks for some of the investors. They don't really sell this stock even if it makes a new high. The stock should be there in the portfolio. So the entry has to be timed. You get these corrections where you can get the stock at a little better price, and then you hold on to this for long term, because there is value which will come out slowly from new listings and from its holding. Plus the tractor business is doing extremely well for them. SUVs are doing extremely well for them. So definitely this is a portfolio stock which one should buy and then hold on to for a long time.
Right, so that's the view coming in on Mahindra Group. Neeraj, what's your take coming in on the pharma sector? Because today you have a very interesting note that's come on the pharma space. You have BofA that's come out with a note on pharma space, where they're saying that the domestic pharma, there's a risk to the structural story. What they believe is that the margin risk from lower volume growth and regulatory risk to pricing are actually not factored in. What's your take coming on the pharma space? I know there are a lot of moving parts, and there are a lot of segments when you talk about Indian pharmaceutical space.
I think pharma space is showing good strength. If you see companies even like a DV's Lab, which even the correction kept on performing so well. So there is a positive news, and then there is some news which keeps on coming, which want to be cautious. But we have seen over the last at least 6 months to 1 year, the sector has outperformed, and I think the story will still get stronger only with the kind of new launches which come from them. The new, so I think which the pharma sector, according to me, even though you will keep on getting this small cautious notes here and there, I think is one sector where if one is stock specific, will still make money after seeing this outperformance in the last 6 months.
All right. So that's the view coming in on the pharma space. On the charts, if you come to you, actually, Naresh, How is the pharma space looking to you, and which of the stocks that are actually shining, or do you think that will actually shine brighter going ahead?
So we've seen selective moves continue across the board, whether it is a DV slab, which has continued in momentum and it has crossed into new all-time highs. Then you have new names which are coming up on the breakout list, something like a Syngene, which is now on a breakout. We've seen some bit of a pause happen in the Lupin, etc., which were doing really well. So for now, we are seeing a shift in terms of momentum. So the earlier winners are taking a pause, and the new winners which have started doing well are doing better. So I would go with DVs and Syngene as the bets which would take leadership from here on.
Those are some of the pharma stocks that one needs to watch out for. But, solar as a theme, as Nikunj was also pointing out, is something which has been doing quite well. Neeraj, what's your take? Is this, energy transition a theme which has been completely appreciated and valued in already? Or do you think this is that mega theme which is something one needs to have in their portfolio if you're making something for, let's say, 10, 20 years in terms of a portfolio?
I think solar is still will make money in the sense that though the margins going ahead, because so much of capacity will come, margins going ahead may shrink, but the volume will increase going ahead. I think there's still so much to be covered as far as solar is concerned. I think this it can go to small household. This can be like industry, household, everywhere. I think the solar energy is going to be used going ahead. So this is definitely a 5-10 year story. But then I think little concern would be on margin, but because volumes making up for that will make more than what it will lose on the margin. So I think the companies will continue doing well going ahead based on the capacities and the volume growth that's going to come their way.
All right, let's move on then. There's this